So good morning to today's session of Boardroom Bites at 9. Our topic is building post-COVID reliance, beating the odds and accelerating towards relevance. Lee Naik is our speaker for this morning. Lee is the CEO of TransUnion Africa. He is recognized as one of South Africa's leading digital and technology transformation experts, and he helps businesses make informed decisions and helps consumers manage their personal information better. So Lee, I'm really looking forward to today's session. So I am going to hand over to you now, and I'll see everyone back again during the Q&A.
Thanks, Vikeshni. I appreciate the opportunity to engage with the IOD audience today. We have about 98 participants on the call today, so it's quite a good crowd, and I think we should have some really good and interesting conversations. As a reminder, if you have a specific question that you'd like to ask, then please feel free to engage us via the chat. And when we get to the Q&A, Vicky will actually moderate those questions and actually have a bit of a discussion as to what's going on. As you may be aware by looking at the title on the screen, I am the CEO of TransUnion Africa. If you don't know, it's the oldest credit bureau in Africa, started back in 1901. So we're in the business of data and insights. Prior to working at TransUnion, I spent 20 years at a company called Accenture, where we helped transform businesses across public and private sector. Today's conversation combines my experience in transformation generally, which I think is a relevant topic when it comes to the reconstruction phase of businesses linked to COVID-19, but also it's informed by the data that we see at TransUnion. For whatever we talk about today, some of the data is very specific, some of it's quite technical. In the end, I'm looking to provoke conversation, but also to have us think differently around what good looks like. My point of view today is expressed by having worked with 5,000 different companies across South Africa and in the broader African continent. We work in 8 different countries. So it's a perspective as to what to do to beat the odds, what to do to drive your relevance as a business, to actually stand out in a crowd. So that's the plan for today. And, as we go through the session, as Vicky said, we're very, very happy to, take your questions and, go from there. So that's kind of the perspective for today. I'm trying to get my presentation to move along. And so let's start with that. So one of the key things to talk about in a presentation like this is how bad are things right now? And then therefore, what should we be doing as an organization, as a business, as a country? These are all really important questions for us, right? So when I think about exactly that topic, a couple things are worth noting. On a weekly basis, we engage with customers across the banking, retail, and insurance sector. What we found in the surveys that we do on a regular basis is almost 77% of consumers have been financially impacted on the back of COVID-19. Now, that does seem quite common. It seems like it's obvious information. But we need to know that prior to COVID-19, we had quite a stressed economy. You'd remember that back in January, the IMF only spoke about South Africa only having sub 1% growth at a GDP level. Prior to COVID-19, we had the highest income Gini in the world, which talked to the disparity between those that have and those that don't have, the wealthy and the poor. The highest income Gini in the world at 0.63. So if things were tough prior to COVID-19 for us as consumers and for us as businesses, things have gotten a whole lot worse. Does it mean we quit? Does it mean we give up? The answer is no. There's always hope. There's always a belief that things will get better, either from a virus perspective with a vaccine coming out, but also from a business resilience perspective. So we'll show you throughout today's conversation what we've seen at TransUnion and I've seen as a leader other businesses doing, and I've done to my own business to drive our relevance in a world that's plagued by this global pandemic. In the recent survey we did, we found that 1 out of every 5 consumers that we surveyed has lost their job. Now, that sounds like a big number, but you've got to contextualize that with where the number was at the end of last year. At the end of last year, we had 29.1% being our official unemployment rate. You've seen in the last few days, in fact, yesterday, more job data was spoken about on a quarter-by-quarter perspective. we at TransUnion are forecasting that the unemployment rate will go high up to the 38% mark by the end of this year. With 3 months to go, that's quite scary. So almost 10% negative growth in employment over the full 2020 year. So when you think about consumers, and these are the consumers that buy from your businesses, we've seen a fundamental change in behavior. Now, this data is available to you post the conference. So we'll actually share this with the IOD. We'll have that sent to all of you. What we found is that on the back of the initial lockdown, lockdown level 5 and lockdown level 4, we all actually focused on staying within our households. There wasn't much movement, and that resulted in the financial impact being created. But we've also started to see that people are now making new choices. We found that more than 60% of consumers have cut back on discretionary spending. Anything that was a may have versus a must have, that has now been cut back on. So what does that mean? We've seen a massive cutback on people vacationing. We've seen people stop their weddings, postpone their weddings indefinitely, stop their car purchases. We've seen people actually stop discretionary items such as DSTV, their mobile subscription, their insurance. So a variety of people, these are the same individuals that we're looking to sell our services or products to. 60% of them have told us they're going to cut back on anything that is an optional extra for their households, right? From a scariness perspective, South Africa is highly dependent on credit, so credit from banks and lenders to actually run our lifestyle. We have a high strain on our disposable income. Prior to COVID-19, as much as 73% of the monthly disposable income that we earn as consumers goes towards servicing our debt. So we've always had a small amount of maneuverability within our disposable income. Post-COVID-19, that's changed and gotten even worse. Almost 60% of consumers have told us that they will not be able to fully pay their debt. Now, for me, running one of the largest credit bureaus in Africa, that's quite scary because you don't look after your financial health. You may actually, as an individual, as a director of a board, as a business, put yourself in a position where, one, your business may suffer in the short term, but even more so, you may have a far-reaching impact into the medium term, given the consequences of not managing your finances properly. So that's quite scary. Amidst all of these things, we're now scared of leaving our homes. We're scared of, social distancing. We're scared of the virus. We're now seeing a massive increase in digital fraud. You've heard about fraud. You've heard about breaches for quite a while over the last few weeks and months. Almost 38% of the consumers we spoke to have been victims of some form of fraud. And that's quite scary. And that's just the consumer lens. So consumers are feeling it really, really tough. Their income has been further strained. More than 1 out of every 5 people have lost their job. They can't pay their bills. And here we are on this webinar asking ourselves, Lee, how do we thrive as businesses? What do we do? Can we survive this? So the answer has to be optimistic because we can't give up. Our history as Africans has told us that we will fight for a better opportunity. We will not give up. So that's the encouragement today on not giving up. But let's just swap lenses before we talk about some of the things that are going on in what we call the reconstruction phase of the economy. Now, this is scary data, focuses on businesses. Now, we've done a lot of survey information. Now, we see data every month from all the big lenses about what's happening to businesses and what's happening to consumers. But we also wanted to engage with businesses to ask them before it happened to them, what was actually going on. And what we found is quite scary. 74% of the small businesses we spoke to just in the last month or so have told us they're unsure whether they could survive. They're unsure whether they can get past the next 12 months. Here's a scary stat. Of the 2.5 odd million small, medium, and micro businesses across South Africa, the estimate is that 1/3 of these businesses have completely shut down and fallen away just in the first 3 months of the lockdown period that kicked in from late March. So that's quite scary. Over and above the fact that 1 out of every 5 consumers has lost their job, we found that many businesses have been forced to scale back on their workforces. Now, why is it scary? Why is it worrying? For many individuals on the call today that run small, medium, and micro businesses, if you don't know this, the reason why global governments and global policy focuses on the recovery of the SME sector Is this where the greatest amount of jobs actually get given to employees or to citizens in countries? We have found in the case of South Africa that more than 65% of those that are financially impacted by COVID-19, remember the previous slide, 77% was impacted as consumers. These consumers, or the majority of them actually at 65%, work for SMMEs. Now, these same SMMEs are struggling, worried about their survival. They've had to cut back on workforces, not because they feel the need to. They have to actually protect their viability. What is the viability? The biggest concern is how they sustain their operational expenses, primarily rentals, property, utility bills. These are the top concerns that owners of small businesses have. How do I pay my rent? How do I pay my utilities? Over and above having to pay my staff. And remember, most small businesses are very small. They're under 10 people. And they're not just small businesses. They're looking after a household where they have extended family. And in those households, we find this strain existing already. Okay. From a credit bureau perspective, we are really worried about what we call business defaults. So many businesses are dependent on loans, on finance in some form, structured or unstructured. We found that most consumers and businesses have told us that, almost, I'd call it 60% have told us that we're expecting to see an increase in business defaults. And that's quite worrying from a data perspective. Okay, so let's start to talk about some of the strategies of what's going on around there. Now, having spent 20 years in technology and digital transformation, for a long time, we've been talking about, this entire notion of technology. Now, let's just get real about technology. If your business is talking about digital or technology being a strategy, something that you need to do to enable your business strategy, this is where we may be getting it wrong. In the new normal, there is no digital. Many businesses, like my businesses and many on the webinar today, are asking the question, what do we do in terms of actually being relevant in this new normal? What do we do to actually make a difference, to actually move us forward? And the truth is that the power has shifted once again into the homes of the consumers. We are scared to leave our homes. We are scared to congregate in malls, in physical branches. There is only digital. So whereas previously you considered saying, okay, I need to have a mobile app. And I've been saying for years, it isn't actually about the mobile app. It's about the fact that the power is with the consumer and the device in the consumer's hand is the route to the consumer. There is only digital. You've seen a massive focus in, for example, the banking sector. The newer banks, the Discoveries, the Times, the Capitec, that are more digitally focused, that have very, very simple user experiences and allow you to actually engage with your audience in a very personalized manner. These are the ones that have shown immense growth. Seeing the data that we have from TransUnion, we found that outside the big four banks, we saw an increase of about 34% in new accounts being opened in the non-top four banks. And these are the ones that typically have strong digital attributes. Now, it's not just the banks. It's the same with retailers. It's the same with all our e-commerce stores. There must be a reason why Amazon.com is hiring 100,000 people while everybody else is talking about job cuts and talking about furloughs and talking about short time at work. There is only digital. So the first thing to consider is, in a world where the physical brand, seeing me as a consumer, is not your reality, you building a relationship with me over a cup of tea or over the counter doesn't exist. All you've got is the Zoom call. All you've got is that mobile device, that 7-inch screen in your consumer's hand. How do your business think about your relevance in a world where you've always relied on the physicality of interaction, the physical relationship, the cup of tea? How do you change it fundamentally where digital is the only way you'll get in and your customers now have more choices? Where previously they would value the relationship, now they're valuing their relationship with you, their experience in store, with a whole lot more. And we've seen a lot of shifting in that regard from a business perspective. Now, when we're talking about shifting, what do we mean? You would have noticed over the last few months, let's call it 6 months, that the market share has shifted. Now, for us as businesses, including myself, we've focused so much on owning the consumer. You want to own me as the consumer so you can look after me, sell me more stuff, wait for the opportunity cycle to come up. But then suddenly things changed over the last few weeks. Once again, Amazon.com, Superbalist, Zando, Takealot.com, these are all names that suddenly, when you wouldn't have noticed it previously, you're suddenly starting to notice it, right? Because as a consumer, I've been forced to rethink my priorities. And I'll keep coming up to this thing of saying, what are your customers' priorities? What's important to them? Now, previously, I had this thing about I had to buy a certain brand. But if you look back over the last 2 years, we've talked about a market shift horizontally and vertically. So what has happened was I could have wanted a really fancy t-shirt from a luxury brand. I've now considered, okay, can I get that same t-shirt from another store at a lower price? I've even gone further over the last 6 months. I've said, can I just get a black t-shirt? Or maybe actually I don't care whether it's black. I want a t-shirt that's orange with pink stripes. It doesn't matter anymore. We start to think about what's important, meaning safety and health versus having to impress ourselves, our friend, our family, or just keeping up with the Joneses. So when I talk about market share having shifted, it's important to consider the following. You've been focusing on your consumer, and that's the wrong thing, right? The consumer is actually not available to you right now. They won't come to you and you can't get to them. What you really want to be thinking about is, how do I get the consumer to actually consume my services or consume my product? We've been so hell-bent on marketing to lead. We've been so hell-bent on getting me the right offer. I actually don't care about the brand. I don't care about the relationship. I care about getting a need fulfilled, a product or service to meet my need. If a e-commerce player like Takealot or Superbalist or Amazon.com or Mr. Delivery can bring it to my house and have all the safeguards around COVID-19, and I actually don't care where it came from. Now, this concept I'm alluding to is actually an age-old concept that we've been talking for about 15 years now. It's a concept called the sharing economy. In the sharing economy, we start to ask ourselves, are there things that we are doing in our businesses today that actually we're not so well suited to doing? So the things that you do right now, maybe it's your payroll, maybe it's your logistics that you were never so good at doing. And given the constraints we find ourselves, we now need to ask the question, am I better suited to doing a certain part of the value chain and somebody else does the other part? Because as an end consumer, I could care less. I need the service to meet my need. I don't care about the how. Now, for many of you that read the book Start With Why by Simon Sinek, right? The focus is on moving up the value chain from how to what and what's to why. If I can meet the need, the emotional heartstrings of your consumer's need, I'm better positioned to actually deliver on the expectation versus having to focus on the nuts and bolts of the how. What we've seen is that the likes of e-commerce players in South Africa, Africa, and around the world appear to own the customer's heart right now because they're offering 24/7 delivery, money back guarantee, free pickups to return unused items, and you can't compete against that from a physical business perspective. Another example of how we've seen a share shift just over the last probably 18 months. For many of you that value loyalty, you've got some kind of credit card or loyalty program with a retailer or a bank. Most recently, we've seen large financial services players offer you a percentage discount or a cashback or some loyalty scheme linked to you being loyal to their brand. We've then seen other competing players, whether it's a bank, a Discovery, a Capitec, an insurer saying to you, listen, if you stay healthy and live healthy, I'll give you 100% back. So suddenly your proposition to keep Lee loyal has been outdone by another player that has no interest in that need. All they're looking to do is shift the economy. Now, from a data perspective, we've actually seen over the last 6 months a massive shift in the spending. Now, typically and we can actually measure the data empirically, which is almost a 20% shift in spend from the banks and the retailers onto the intermediated parties. So these middleman players, I'm talking about your new digital banks, I'm talking about your Takealot, your other e-commerce players, a lot of the revenue has shifted to them. So the consumer has shifted and the share has shifted. So one of the key things I want you to take away is What is your value proposition right now? Is it about having a strong relationship? Does your business work exclusively on having 10-year relationships? What is the real proposition you offer your customer? Because in a world that's becoming increasingly commoditized, where customers' priorities and value system has changed, will your business still stand up to the test of time? So one of the challenges we see at TransUnion, we process billions and billions of records every year. But one of the things that's really odd is that even though we live in a digital world, in a data-filled world, you cannot see me. So let me give you an odd example. I've used this for many, many years. But if I was on a gluten-free diet, right, and I keep getting advertised via text messages or via Facebook or some social media that I should buy a 2-for-1 pizza special. And that irritates me fundamentally because I'm gluten-free, I shouldn't be having a pizza. But if they told me maybe it's a gluten-free or base-free pizza, offered me something else, you would start to feel that they know me. In the same way that behind this curtain, one of these two dogs could be a Labrador, it could be something completely different, but you cannot be seen. By way of example, recently, after 20 years of being uber loyal to my bank, my telco, and my insurer, I moved all three to another big player. Even today, as I talk to you, I've never been contacted by the players that I left and I moved to because I'm just a number. I cannot be seen. So in a world where you don't have physicality, the closeness of relationship to allow your business to be seen, how does your customer perceive you? How do they feel that you relate to them? Are they still a number? Or have you found a way to connect with them beyond the current means? Now, I was actually talking at a marketing conference just 2 months ago, and we're talking about the large amount of spend on billboards, radio, and advertising. The estimate on above-the-line spending in South Africa goes in the region of 50 to 80 billion rands a year. How many of you are driving around today, driving past billboards? How many of you still watch television or listen to the radio versus YouTube or on demand? So all those billboards going up, all that media, the content being put together, how are we actually getting it to the consumer? For a consumer that doesn't care, for a consumer that's depressed, that's constrained, how do we get the customer to see our proposition? Now the answer is difficult. The answer says there's no silver bullet, but we've got to find ways and thinking around how do we see our customer. Now, you may say, Lee, that's fine, I've got this covered. My view is very simple. If you've got millions of potential customers, is there a way to focus on a smaller set? How do you focus your efforts? Now, for many businesses on the phone, you would say, Lee, I'm good. Don't worry about it. We have enough money. We're good to go. But for how much longer are you good to go? How much longer are you able to actually do what you're doing? And that's quite a challenge, actually, because when you think about how much longer, you can't tell me, Lee, that it's only 3 months to go before the vaccine arrives. We don't know that. It's going to fundamentally change. So we're going to explore new ways to hyper-personalize, or what we in the data world call hyper-segment your customers. So you know that Lee is a person with a need. You can trigger things of Lee's personal needs. So Lee may be up to buying a new car. He may be about to have a new baby, right? These are all things that are important in his life. Are you seeing me for who I am, or are you assuming who I am? So I really need us to think about how do we get to know the real me. The real me is not an ID number. The real me is not a persona. My persona, the persona that you've been targeting as a business, has fundamentally changed forever, right? What drives me now is not the same things that drove me before. Our data at TransUnion tells us most people have delayed their car purchases, their house purchases. 11% of consumers told us they have deferred or delayed their marriages. I'm not sure why they did that, but it's important to consider that something in their minds told them what's important to me right now. And as businesses, as leaders, we're going to make sure, whether it's our marketing team, our customer experience teams, even our user experience teams, what are they doing to actually get you to understand your customer better? Why is it important to understand your customer better? Because right now, you may be doing 20 things, maybe doing 100 things, maybe you should only do 5 things. When I joined the business I took over, and I would like to think that when I took over the business back in 2017, I was joining as a turnaround CEO. I took over a business that had started in 1901 that for the majority of its time was a single player in the market. We now have many competitors. So when you think about relevance, you ask yourself, do you compete on pricing, which is what we call commoditization, or do you seek to differentiate? So we spend a lot of our time asking ourselves, do I want to be a service provider to this group of customers? If not, I need to walk away. I may be saying no to revenue that I've had for 20 years, but it's the right call to allow your limited resources to focus on where you'll grow your business. Remember, your shareholders don't really care whether you have product X, Y, or Z. All CEOs, all leaders get measured on two things, revenue and margin. Any conversation beyond that starts with you making those numbers, meeting the expectation. So when you start to understand your consumers, you start to understand what you need to respond to in terms of what we call critical needs or critical business issues. When you figure out what those issues are, you then need to start and ask, do I have the products now to deal with these requirements? Or if I don't, what do I need to do to actually meet their expectation? When I took over in my business, we had 1,800 products. Today, we sell 5 things in response to us understanding our customers better and where they're going to. During COVID-19, we revised that and said, okay, we need to further tweak things based on the reconstruction phase of the economy. And it's an ongoing thing. You can't just say it's a 5-year plan. We're going to play the plan regardless of what's happening around us. You may say, Lee, it's market dynamics. COVID-19 is a global pandemic. It happens once every 100 years. It will forever change your business. Let's get to ask and understand our customers better. Now, when you think about what people want, we talk about outputs. Everybody's measuring your outputs, but then I can't see the 700 people that work for me right now in 8 different countries. I would like to hope that they're doing things at their home, at their work office to create value for TransUnion and our shareholders, right? In the end, me checking their time, asking them to have their camera on the entire time, it's useless at best. The question is, what is the outcomes that matter? What are the outcomes that matter for you as an individual, for your business as the leader, for your family? These are outcomes, whether it's safety, whether it's health, so whether it's keeping a stable income, whether it's driving your commissions. These are all outcomes that matter. What we find is that for a long, long time as leaders, we've been focusing on an obscene list of metrics to measure, to say we have green dashboards. In the end, what are things that matter to your consumer? Why will your customers stay with you versus jumping across to the next telco or to a bank that's pretending to be a telco, right? Why should any of this matter if you're focusing on outputs? So when you think about your business right now, what are those outcomes that matter? Have you tested those with your customers? Have you sat in a boardroom with your colleagues internally and tried to assume what you don't know? The reason we do these surveys, the reason why we do these interactions with consumers and businesses is that it is foolish for us to assume that in a world where everything's uncertain, that we have any certainty at all regarding our go-to-market, our product, our systems. For your business, what level of certainty do you have that your go-to-market makes sense? And if it does make sense, for how long will it make sense before a copycat business starts to copy what you've actually done, what you've got? And then finally, we think about choice. Now, as a digital guy myself, who's worked in transformation my entire career, we've been singing the song of omni-channel for a long time. Effectively, omni-channel means that your customer, your consumer wants to interact with you through a variety of channels, be it the call center, the walk-in, your website, maybe even your WhatsApp chatbot these days, as many businesses are doing. The trick, though, is that as a business, you have little choice as to how much you control your customer. Our data has told us that more than 40% of customers that actually conclude purchases don't conclude the purchase in the channel that they started the interaction. So it could have been via the website, it could have ended up in the contact center. It could have started up the contact center and gone to a walk-in branch. What's the key thing about omni-channel is that we forget that the customer has power. Now, we aren't able to get into the houses and to the minds of our customers because we don't know their priorities anymore. They want to do something we call omni-choice, which is a new concept that we start to talk about. Omni-channel versus omni-choice. The choice is with the consumer to choose whether to do business with you. The choice is with the consumer to decide whether your CVP, your proposition, makes sense relative to the nearest competitor. It's their choice that they choose to have a mental breakdown, to have depression at 2 in the morning when your business is shut down. So when you think about omni-channel, that makes sense. But remember, if you try to dictate to me, to Vicky, to anybody, right, for that matter, how to go about their lives, we are foolish to believe that we now have control. We can drive them via marketing, via digital. There's a certain level of influence. But if my priorities have changed, and fundamentally, how I think about business has changed as well. So omni-choice is the reality, and omni-choice is here to stay. And the final thought I want to leave with you as we think about this conversation about driving relevance is that, remember, forever and a day, we focus on owning the consumer. You can't own a consumer that you struggle to see, to touch, to engage with. The focus should move from owning the consumer, from getting your brand to the consumer, to focusing on the metrics that matter. Ultimately, unless you're an NGO or not-for-profit, the focus is going to be on driving revenue, driving pipeline, driving volume, driving margins. These are the things that you need to think about. Think about the sharing economy. Ask the hard questions. You make the omni-choice yourself. Are there things that I'm bad at doing? What are the things you should be doing versus not doing? Maybe you divest from businesses. Maybe you divest from reason. Maybe you partner with a third party to do your payroll, to build your product, to help you expand your distribution globally or locally. These are choices you need to make. When you think about where we are right now, as a business, as an industry, these choices will decide whether we as businesses survive the short to medium term. As a reminder, 74% of the businesses told us that they will not survive the next 12 months. 74%. My view is that that's pessimistic if we choose it to be. It could be optimistic if we choose to make choices today to help guide us in a new direction, to help reimagine our businesses. Because doing what we did prior to COVID-19 won't set us up in the right direction. With that, I'm going to hand over to my colleague and host, Vicky, who will engage us on Q&A. So if you have any questions, now's the time to engage us on the chat channel. And we've got some other questions that have already come through on the list. So Vicky, if I can ask you to put your camera on and let's do some Q&A. As a reminder, as I do that, all the data referred to comes from publicly available reports from TransUnion. I'll ask my IOD colleagues to make that available to you. If you have a specific question regarding your business or you as a consumer that you're worried about, that you believe that TransUnion could help us to, reach out to Vicky and her team, and let's see how we can help you on a one-on-one basis. Thank you, Vicky.
Thanks so much, Lee. There's a few questions coming in, and if anyone would like to ask a question live, please raise your hand and I will assist you and enable the talk functionality for yourself. Lee, to get going, for many businesses that may be on the webinar this morning, can you share from your view and vantage point what businesses should stop doing to improve their chances of being relevant in the new normal?
That's a good question. Thank you, Vicky. I think when you think about businesses right now, and I've covered some of this already, but there's certain things in your business that aren't profitable, that aren't making sense. So I'll give you an example of my business. So when I started at TransUnion in 2017, we had 1,800 products. Within 6 months, we had it cut down to 600. It was a brute force decision to decide which are the products that have few customers and have a few amount of revenue with less margin. That was a brute force decision to lower the amount of effort. The reality is that we could never do 1,800 things properly. For many of us, we cannot do 10 things properly, right? So that's the first thing. I'll give you an example, Vicky, of something I've decided to do now that's going to impact my business fundamentally. I've decided to shut down a product that's been working for 20 years in the market, right? It's something that has limited value to the consumers we serve. It may upset the few customers that use it. However, it detracts from my ability to choose a product or a solution that will add value and innovation to the broader economy. So that's another choice I've made to break a revenue stream versus protect the stream, because I know that me doing more of the same, Vicky, will result in me being irrelevant in 3 to 5 years' time. So it's about choices you make, looking at customer demand, looking at products you have, but some of these choices sound obscene because it's a revenue stream that works right now. Why would you give it up? I hope that helps, Vicky.
That's a very good answer. Thanks, Lee. I've got a question from Mohammed, and he wanted to know, how can you balance between resilience and agility?
That's a really good question. So 2 things about resilience. Resilience is almost being like a cockroach, being able to survive anything, right? When I think about resilience, I use the word industrialization. Now, for many businesses, including myself, we're not industrialized or resilient enough to survive change. Now, one of the key things about resilience, Mohammed, when I think about the definition of insanity, right? Ask the same question over and over again, hoping to get a different answer. In the case of industrialization or in the case of resilience, what you're going to do, Mohammed, is make sure that the core part of your business is able to predictably do what your customers and you expect. So 10 times out of 10 times, whether it's Six Sigma, Kaizen, or something else like that, that you're able to do that. Now, resilience does not mean you can't be agile. I've been using a word called elasticity forever. So how does agility and elasticity come together? Agility is my ability to be responsive to the changing market dynamics or my client's needs. In my business, I've reserved some internal capacity to allow me to pivot internally direction and say, I need to adapt to a client need. I need to pick up a new workload. That's internal agility. What I've also done, which doesn't cost me anything, Mohammed, I've struck partnerships with 30 different channel partners in my business to actually give me elasticity and agility. Not on my balance sheet, no cost to me. When additional work comes in, I can pull up the burst elasticity to give me the agility. So there's 2 concepts I just want to leave you with. 1, resilience infers industrialization. Can your business predictably do what it has done and continues to do for the foreseeable future? And it's an important question because for many of you, you'd say, Lee, of course, yes. And if I ask you, what if some of your key employees were struck down by COVID-19 and couldn't come to work? Would you be resilient? We spend time on an ongoing basis trying to break our processes to prove resiliency. We literally have tests that say, don't come to work, don't do that process in a very, very complex organization to prove our resiliency. Equally so, we're always striking new partnerships to test agility and make sure all our security concerns and partnerships are dealt. So that's how you do and you balance the both. It isn't a choice, it's something you're going to do in parallel. My advice to you is, why do it by yourself if you can avoid? Why not use somebody else's balance sheet? Why not use OPEX and use somebody from your sharing economy? Thank you, Vicky.
Thanks, Lee. Dillian has actually asked a follow-up question from the previous one. What informed your decision to break a revenue stream? In other words, cut a 20-year product.
It's a really good question. Thank you for that, Dillian. I think when you think about breaking a revenue stream, the key question is, what is your strategy for your business? I've literally revised our 3-year plan. So for many of you, you do a 3-year plan, including myself. We do a 3-year plan, and if a 3-year plan goes from 2021 to the end of 2023, then we start talking about the 2024 strategy in 2023. That's actually an old passe practice that has to change. So what we do, Dillian, is we actually say on a yearly basis, let's revise our 3-year plan to say the next cycle of my 3-year plan, is that still relevant? And clearly it's not relevant in the case of 2021 based on the new data and information that we have. So in the cycle that we've gone through, Dillian, we've actually had a look at those key data points and said, okay, that product will not perform as well because it's linked to the discretionary spend that I was looking to capture. In a market where there's no discretionary spend, let me break the revenue stream. Now, execution of that decision is where the important part comes in. How do you execute on change management to actually make sure you don't lose your customer? So for every customer that may be impacted, we've already decided it will be an 18-month period. We've started the internal communications, the engagement plan. What will we do? What's the alternative? In some cases, Dillian, I've actually got no alternative. So we've globally found partners that will take over the revenue stream for us. I will lose the revenue completely, but I won't lose my relationship with my client because I've told him I've had to make a conscious choice as a business, and I found you a partner to take over that service that I trust on an ongoing basis. So these are the choices you have to make as part of your yearly planning.
Thanks, Lee. I think that's a really good advice that you've given us. So a question from Dillian as well. She wanted to know how many small businesses participated in the survey that you mentioned. I'm not sure if you can answer that.
How many people? So on a 2-weekly basis, we survey a minimum 1,000 consumers. In the SMME data, we surveyed close to 700 businesses. For all the surveys we do, it has a statistical sample accuracy of 95%, Dillian. So we work with a global organization called Qualtrics. We run these surveys in 7 countries concurrently. So the methodology is quite sound, and we always look to get a fair basis of the sample across all 9 provinces, including race, income, and demographics.
Thanks for that information. Charles says, thanks for a great presentation. And he says, we mentioned that COVID-19 is a once in 100-year type of event. So you want to know, do you have any, what other lessons, patterns, or drastic changes have we observed from other historical events?
So, Vikeshni, I'm going to ask you to hold me accountable on this. So there are several documents I've referred to on the consumer survey, on the SMME survey, and there's a new one called the COVID-19 playbook that you need to get me to give to your audience today.
Okay.
So the question that Charles asked is a really good question. Back on the 6th of April, Charles, we launched something called the TransUnion COVID-19 playbook. In essence, and we could have a follow-up webinar if needed with the IOD, so I'm very happy to do so. We actually tried to answer that exact question, Charles, back in the week of the 6th of April. So there's a playbook available around the global phenomenon that's within reach of this global pandemic that could be useful to you and to the audience. So what we had a look at was, we had a look at the demonetization of the Indian rupee, right? We had a look at Hurricane Katrina, the impact in the US. We looked at Hong Kong and China because they were ahead of us in terms of the COVID-19 pandemic. And interestingly for us, we have a business in Hong Kong that's actually saw the entire period through of the initial COVID impact from back in November and December last year already. So we had a look at that. And we had a few other looks at other key events around the world. So I won't answer it now, but what I'd say to you very, very quickly is that we have an entire playbook that actually put together the learnings, Charles, from global phenomenon like pandemics. And we started to actually model scenarios of what we thought the impact would be. We actually modeled the GDP impact, which we've been very, very close, and we modeled the interest rate decrease, which has been pretty much spot on, and we also modeled the unemployment rate across sectors. So, Vikeshni, I'll make available to the IOD the COVID-19 playbook for distribution to your audience.
Perfect. And just to let everyone know, you will get a copy of the presentation, and the recording of this webinar also will be up probably later in the week, and we'll get all those documents Lee mentioned and send that to you in the thank you email with all of the links as well. Lee, I hope I say your name correctly. Augusta wants to know, what's your views around the relationship between the 4th Industrial Revolution and leadership, taking into account your presentation of this morning?
Can you repeat that question for me, just so I capture it properly?
What's your views around the relationship between the 4th Industrial Revolution and leadership?
Yeah, it's a really good complex question. So the first thing is 4IR is a terrible thing. It's an acronym that's just so overused. And as a guy that literally speaks about 4IR for a living in my previous career, I'd like to almost say to you that it's almost overbaked and it looks to scare you. What 4IR is about is the next phase of technology. And the simplest way to think about 4IR is that it is forming all parts of our life. It's coming smaller and smaller, and it's injecting itself into all parts of our businesses and our lives. When I spoke about digital first earlier, being in my hand and being the key point of my interaction with your business, that's all part of 4IR. Things like automation, artificial intelligence, these are all key elements, Vikeshni, of what 4IR is. So that's what 4IR is. If you ask me as a techie, right, what you're going to do is seek out presentations. I gave one earlier this year, back in January, about the key trends for 2020, which I'm also happy to share, is that don't be scared about the techie. As a techie, I don't have to talk about tech anymore because we really want to understand what is the business value again. So if you ask me, for example, like in 4IR, what's the most useful thing right now to the 153 members on the panel? If you don't have a chatbot that you're using as part of an RPA, which is robotic process automation, we know that technology can do things on a 24/7 basis better than humans can. They don't want leave, they don't want sick leave, they don't want smoke breaks. They just want to work all day long. How does one actually use that on an ongoing basis? So happy to share that with the audience as well. That's the 4IR part. And I'd almost say to you, de-technologize that entire 4IR concept. From a business perspective, and I am a CEO of a business where on the other side, I spent 20 years convincing businesses to make changes around 4IR. The biggest challenge is that as leaders, we don't understand what we're trying to do, trying to measure, right? Now, the great thing about 4IR vacation is that we're not on the bleeding edge anymore. Back in January, I do a yearly presentation on the big trends for every year, and I called it the key things you should be aware of. My view to you is as a leader, we're going to start with ourselves. How do we lead an enterprise? How do you lead a tech revolution if we can't talk the language? I don't want you to code. I don't want you to build apps and build cloud stuff. You need to understand the use case, the benefit case, and what your CIO is asking for money on. If he asks you for 5 billion, man, just say no because there's cheaper ways than 10 years ago. But I think the point about leadership is that we are uninformed generally, including myself, about tech. So I spend a lot of my own personal time catching up with the world, asking questions on how is that being used? What is this thing called Azure? How is cloud being used? How do I benefit from it? And the great thing about not being on the bleeding edge is that many of your peers have walked this journey already. There is no shame in asking for others, myself included. How have you done this? Can I find an example? How did you walk the journey? How did you make the choice on not keeping payroll inside of your business? Why have you not chosen to send your people to India and use an outsourced delivery center? That's a great part about the sharing economy. We can't have pride though, vacationing. We need to understand that we don't have all the answers and we need to engage. If you go to a place like Kenya where I have a business, I find a different comparison level. I find that the Kenyans seem to ask more openly and say, hi, my name is Lee, I have a problem, can you help me? Whereas in South Africa, we tend to say, let me try over and over again until I've wasted all my money and then I want to ask for help. There is no shame. You don't need to have pride, ask for help. And I think the benefit of a leader in 4IR is that if you understand the value in terms of the benefit case and on your bottom line, then you will actually make the right call after you've consulted your peer group. Thank you.
I think that's really good. And also just changing culture as well. You've got to create a culture of innovation, I think, within the team. Always wanting to.
Well, let me just comment on that actually. So from an innovation perspective, this is something I have a pet peeve about. Some businesses have an innovation day once a month or have their innovation hour. And they pretty much say, guys, for the next hour, we're going to innovate. We're going to break all rules, we'll break all the policies. And at 2 p.m., the boss says, get back to work. You've lost an hour already. Innovation is a commitment. It's a culture. It's inherent in your DNA. As a leader, if we aren't committing to changing how we work internally, so whether it's RPA, AI, process automation, new sexy website, if you're not committed to that, you're letting your people down. If you're not committing as a leader to challenging your strategy and finding new ways to do things, then you are making yourself redundant as a CEO or as a leader. We are asked, we are challenged by the board to say, you bring the innovation, lead the charge, set the vision, take us into a North Star direction to help reconstruct our business coming out of COVID-19.
That's perfect. With that in mind, David asks a question: how do you see the future of work going forward? Are decentralized flat structures here to stay? And what skills will employees and leaders need? And I think maybe coupled with that is what should employees be doing to also reskill their current staff complement as well?
Yeah, there's lots of subcomponents. So we have a little bit of time. So let me break it up for you. The concept of holacracies isn't something I firmly believe in. So holacracies is a flattening of structures like Zappos did to, have a trust-based model to run the businesses. It doesn't work in a business that has thousands of people. if you have a small startup where you all kind of able to, cooperate and collaborate in a way that makes sense, that could work. What I do see is that the notion of telecommuting will forever change. So here I'm sitting in my home office. We've decided as a global business working in 34 countries that we'll not go to the office until at least January next year. Now, in a good way, we've been driving a digital transformation for 3 years to allow us to make such a call. So we see that work from home is a net new normal for our business. To give an example of how extreme my thinking is at this point is, my office comes up for renewal in the next 12 months. I've already decided that my office, the new office we build, we will have an office, it'll be 1/5 at minimum the size of my current office, right? I've assumed, as part of my own naivety, that I need to see you to know that the work is being done, David. I now have, under the duress of lockdown, been forced to drive productivity as a culture, high performance as a culture, and I can't force you to come to work. I've been wrong. We've all been wrong. So how do you find a way to make this work? So over the last 6 months, I've come up with my own routine as a leader to manage my people. The first thing I've done, David, is I've cut all meetings off, right? I have one meeting a month, which is my Excel meeting. I don't do check-ins. If you want me, WhatsApp me, I'll call you back. But we need to find a way to trust. And as leaders, we don't trust. That's one concern. From a work from home perspective, a couple other concerns. You're going to struggle to trust your people, but you have to trust them. Move from outputs to outcomes. Project done on budget, on schedule, that's an outcome. Having a PowerPoint that says I'm in green and the product isn't delivered to your customer is a cool output, but you don't have the outcome. Choose the measures you need. In terms of skills, in terms of other work from home techniques I've learned, so a couple of things I've done as a leader, I've decided to implement something called AFK. AFK is away from keyboard. So in my business, between 12 and 1 every day, we don't allow any meetings. No meetings across all of the 8 countries I look after. You need to break away and have the chance to walk your dog, walk your cat, have lunch, spend some time with your kids. That's part of it. Now, why is it normal? It's normal in the new normal because you can't control the fact that this laptop is my office. And inevitably, when I first started lockdown, we all did. We ended up working more hours, not less. But for your employees to be productive, you need to find a way to give them balance. Now, you may say, Lee, balance is not my prerogative, it's not my priority. Well, it is. If your people are going to start to have medical issues, health issues, depression, they're not seeing their family, you're going to have issues of productivity. So I would say to you, rethink how you do things. We've implemented things like core working hours, no meetings after these hours. You can't call me after 6 p.m. unless someone is in a real emergency. It sounds very, very draconian, but maybe that's what's needed to change the culture of the business. And then finally, from a skills perspective, some may say to me, Lee, it's very difficult to build new skills. And I vehemently disagree with that. The entire notion of having a degree, having a qualification to get the work done, it doesn't really matter. There are more and more people using the likes of MOOCs. MOOCs is a massive open online course, whether it's Udacity, Coursera, edX, Virginia, Washington, Harvard. Everyone's offering free education. Why? We want to change the base substrate level of the global employee base to be digitally aware, to be net new aware of skills. So 2 things I'd say, Vikesh, to wrap up my answer. As an employer, you need to know that you can't control how long your employee stays with you. In fact, many of you are starting to see that people are leaving you even during lockdown because they now have option. In the new normal of digital, I don't need to see you to know that you're doing the work done. In fact, the average tenure of a millennial in the digital world is 1 year. I spent 19 years at one company because I felt so loyal to them. I can't get my people to spend more than a couple of years with me. So while they're there, drive your productivity. Equally so, give them a reason to stay. So 2 things. 1, as an employer, what are you doing to introduce unstructured learning, or what we call an LMS, learning management system, that whether it's Coursera, edX, LinkedIn Learning, your employees expect you to help them upskill themselves. Equally so, employees, consumers, employees like us, being relevant is our accountability. If I choose to be irrelevant because I want to live under a rock, then I will be unemployed. I will not be relevant to my customers, to my shareholders, to my consumers. So you need to encourage as a leader via your HR and talent management practices to your people that say, guys, we will meet you halfway. These are things we will do. But we'll also do things to help encourage you to make time. So in my business, I've allowed my Exco team to give their team an hour a week so they can catch up on their LinkedIn learning. With gamified learning, say, okay, if you spend more time educating yourself in an unstructured manner, we're going to give you points, give you a prize, find ways to keep them sticky to your organization. I hope that long answer helps somewhat. There's many subtopics in there, Vikeshni.
Yeah, no, thanks, Lee. That's some really great tips that you've given there. I like that unstructured learning and giving points to encourage your employees to actually take up the time to actually upskill themselves. We don't have a lot of time because I know you've got another webinar to get to at 10 o'clock. But before we go, there's a couple questions on here that was around data and privacy and how that potentially impacts companies also knowing their customers. And you run one of the largest data businesses on the continent. So what should businesses know about leveraging information and insights to drive relevance and resilience and complying with data regulations? I know TransUnion has a brilliant product as a individual consumer to also protect my own data information and privacy. So maybe you just want to share some of that as well with our listeners.
Yeah, I would just say a couple things. One, don't live under a rock as a business or as a leader, right? The world is much bigger than anything you know. So whatever you know, I know more about. I have vast volumes of data, which I'm entrusted to under many regulations that hold me personally accountable. But in terms of your business, you need to realize that insights helps you understand your consumer, your product, your performance, your go-to-market better. If you're not leveraging the strength of insight in the market, whether it's Gartner, Forrester, TransUnion, it actually doesn't matter. But if you're not doing that, you're missing a trick. So that's the first point. Secondly, from a compliance perspective, everyone's well aware that we now have POPIA, which is the local instantiation of GDPR, coming into play from the middle of next year. If you're living under a rock and hoping it goes away, it's not going to go away. Consumer protection is important regarding data, and it's going to be there. So for me as a business, every process I run is subject now to a POPIA project to make sure we're compliant. So as leaders, we're going to be held accountable. Our turnover may be penalized if we don't show compliance to these things. So I'd encourage you, if you haven't actually done this already, you need to. So make the time to actually engage on these hard topics. It sounds boring, right? Because as leaders, that's our accountability. When the risk committee finds you didn't manage this risk, it's going to come back to you as a leader, right? So I would say, I think Barney had asked the question, every service you offer between now and June 2021, make sure you've checked the entire notion of POPIA. If you haven't gone on a POPIA course, there are many available. Do one of those. If you don't have internal skills, get a third party to advise you. But you've got to find a way to get to grips with your accountability. Being a leader in this new world is not easy. It isn't a family-owned business. You're now subject to Company Act, National Credit Act, FSCA regulations, POPIA, right? There are many things that we need to do, and we're going to think about our role as leaders in the new normal. So I would say very simply, you have to be compliant. Everything we do is subject to that. If you don't do it, right, Vikeshni, accountability will fall on our shoulders. And at this time, the shareholders will not be lenient on us because we don't have margin to spare. We don't have revenue growth to spare. We've got to make the bold choices. And for this period of time, our ability, like Mohammed said, will be about keeping the business resilient while being agile to the change that's expected of us in our multi-year plans.
Perfect. Thank you so much, Lee. Thank you very, very much. I'm sure many people want to ask more questions, and we can probably go on and on about this topic. Thank you so much for your time. This was brilliant. I think you've shared some really amazing practical tips that I think everyone can take back to their own organizations. And we will definitely share with everyone that's attended today the documents that you mentioned from TransUnion. We look forward to hopefully having you again with us soon, Lee. So thank you very much, and thank you for everyone attending. We will share the recording and the information, and we'll see everyone again next week. Thanks, Lee.
Thank you.